Now that we have an overview of what on-chain trading is, let's jump into actual decentralized exchanges and how to execute a few trades across different blockchains. So let's first start with Uniswap. Uniswap is the most established and the most used and successful decentralized exchange across multiple platforms, as we reviewed here. And this is ranked by trading volume. So you can see Uniswap for version 3 on the Ethereum blockchain processes over $1 billion every day that it settles across peer-to-peer. So rather than a centralized cryptocurrency exchange, which is using order books and people injecting liquidity and market makers and really movers and shakers establishing funds and deploying capital towards particular order books and pocketing some percentage of that as a maker fee, as an example. Decentralized exchanges work peer-to-peer, so person to person. And the way that liquidity is available for market participants and traders is through liquidity pools. So that's one way that you can actually make money as well in a passive investing way, is you can generate a return by locking up your funds into liquidity pools across different decentralized exchanges. And you can take it multiple steps further and over leverage yourself and deploy some capital to some liquidity pool, then go onto any of the established like loan and like lending platforms themselves and start actually going and taking a loan. And then you're borrowing funds. You can loan out funds back to other platforms, and then continue to over leverage yourself. But it's best to avoid doing that. But if you're using decentralized exchange like Uniswap, your first thing is this is going to be essentially the uniform interface that you're going to be seeing across most decentralized exchanges. There's always a step to connect your wallet. And so MetaMask is one of the most commonly used hot wallets, or think of it as a Chrome extension, or as a Brave extension, or as a Mozilla Firefox extension. And if you have it installed, you can just connect directly to the Uniswap exchange. Uniswap has its own wallet now. Phantom is another very established, successful wallet provider. Pontum is one of the newer wallets, and they have more advanced features like smart contract account management and account abstraction and many other features. And then Wallet Connect is, think of it as a composite like provider, and then Coinbase Wallet. So those are the main wallets that are available via Uniswap to be able to connect natively. So to connect MetaMask, you just click MetaMask. It connects directly to a wallet that's already connected to it, which is one of the BlockCircle global wallets that we have that we use for experimentation and research. And you'll see some of the tokens that we hold in this particular wallet, which is Ethereum, Tether on a different blockchain. You can see the blockchain identified here. Some Ator protocol and some other Ethereum on another blockchain, and then some staked and restaked Ether, some injective protocols, some BNB, and then there's many other, most of these are all scams here at the bottom. So that's how you connect your wallet. And you can also connect and see NFTs. If you have any pools, if you have activity, you'll be able to see it all here. And for you to execute a trade, you use this swap interface. So they call it swapping. You're swapping one asset for another asset. It's the same exact equivalent of you going into a Binance centralized exchange and saying, I want to buy Ethereum by selling Bitcoin. I want to buy Ripple, XRP, by selling Litecoin. You're swapping X for Y, right? And that's the numerator and denominator. In this particular example, ETH is the numerator. You're exchanging ETH for some other asset that seems interesting to you and you want to buy some. So Aave. Aave is an established, one of the market leading loan providers. Okay. So if I want to buy a very small amount of Aave, let's just say we want to buy $15 worth, you put in the quantity of Ethereum that you want to use to be able to acquire 0.17 Aave, or you can change it and type in 0.2 Aave, which is $18 worth. And right here is the slippage that you're going to be experiencing. So it's 0.31%. And the slippage, again, is driven by liquidity pools. So if you have a very liquid pool and a very deeply liquid pool, then you're going to experience less slippage, right? And the more established tokens have deeper pools of liquidity to tap into. Less slippage means lower transaction cost, and it means that if you're looking to acquire 100 units of asset A and the liquidity pool can absorb that type of transaction, then you're going to be getting close to 100 after the trade is actually executed. So that's how this works. And then to swap, you execute it and you say, does everything look good? You want to be able to look at more details. Price impact, like we talked about, is the price slippage. You have a maximum allowed slippage threshold set to 5%. You pay absolutely at most 0.006. And then your fee is 0.25%, that's the fee that's apportioned back to the Uniswap Foundation. And then some of that also goes to the actual liquidity pool. And then your network cost is what we're paying in gas. That's the expected gas cost. So Ethereum being a layer 1 blockchain, gas cost is exorbitantly higher than it would be on a layer 2 blockchain. And the same on a layer 3 is even more inexpensive. So even you look at other competitive layer 1 blockchains like Solana, the reason they've exploded in popularity and usage is despite the fact that they may be compromising some aspects in terms of centralization and exposure to being able to have too much control consolidated to a small group of providers, it's incredibly convenient and it settles transactions fast. Recently, it's facing some congestion, but overall, that's the reason it's exploded. So people don't want to pay $7, $20, $30, $100 for a transaction like you have to on Ethereum. They want to pay like 5-10 cents, right? So if you're okay with everything that looks on the screen, you confirm the swap. MetaMask is going to pop up and you can see it here. It's going to ask you, are you sure you want to send 0. Right? So are you sure you want to send 0.008 ETH to this particular address, which itself is the actual smart contract managing the liquidity between person A and person B. So person A is myself and person B is the liquidity pool. And then let's confirm it. So we confirm it and soon the transaction will be confirmed. Once it's confirmed, it'll be posted to a blockchain. And it's posted to the Ethereum blockchain and you can always see and you can view it on the actual blockchain explorer. One of them is called Etherscan. And Etherscan is just one. There's over 100. There's like Blockchair you could use. There's blockchain.com, which consolidates Bitcoin transactions. There's countless other variants of it. There's like Arbitrum and Optimism scan and Solscan. But if you're using an Etherscan, you always get a transaction hash. So this transaction hash, think of it as like a confirmation ID or a transaction ID. It shows you the success. It shows you how many block confirmations have actually been produced after this transaction. So this is the actual block number that this transaction was included in. You have your timestamp, shows 14 seconds ago. What was the actual settled transaction action? So we swapped, this amount of ETH for this amount of Aave, and then afterwards you'll be able to see ERC20 tokens. Of course, are tokens that have been issued on the Ethereum blockchain using the ERC20 token standard, and you'll see it step by step. So it's like from the Uniswap universal router to this address. And it's then converting that into the actual Aave token itself, which then gets deposited directly into your wallet. And what's very important when you're doing any form of trade on Ethereum is that you have an MEV bot protector. So if you look at what we have here for Block Circle, this is MetaMask wallet. And you have And if I'm going to import this token, now we'll be able to actually see the Aave, 0.2 Aave that we bought. You'll see it right here as an actual token with a value attributed to it. And what you should be able to have is you should always try to stick to an MVB blocker. So what this means is it's something called a minor extractable value protector. So what this means is that whenever I'm going in and I'm choosing different blockchains that I want to transact on, try not to choose the Ethereum mainnet if you're doing anything beyond like, a few $100, because even less, like I would say even anything above like $50, try to use the Ethereum mainnet node. It's called an RPC that actually belongs to the MVV bot protection tool. So it's completely free. All you do is you literally go in, you click add network, and then you would be able to go in and say, I want to add network manually. You put in the network name, the RPC URL, the chain ID, the currency symbol, and that is it. And the way that you do that is you go to the MVV bot website itself. So I will show that now. So if you go to the mevblocker.io, this allows you to be able to be protected from being front run, right? Or sandwiched. That's what they call it. And that's where you have opportunistic traders and arbitrageurs who are trying to, and very successfully so, front run you to make sure that they can acquire the asset that you're trying to acquire faster than you can, and then sell it back to you at a higher price. And then they pocket the actual difference itself. So there's phenomenons called front running, sandwich attacks. There's also what MVV basically does is it's actually a back runner. So it protects you by beating the other front runners. And then you are yourself indirectly paying a small nominal fee to the people who are actually providing that type of anticipatory type of protective behavior, right? That's exactly what the MVV bot protection is doing. And the way to do that is you can just add it to the wallet by clicking this, or you can add the name like I just did manually. I prefer doing this because I'm I'm more conservative and I want to make sure it's done properly. And it gives me the peace of mind that I'm in control of exactly what RPC I'm using. And you can read through the FAQs. It is very fascinating subject. So that's Uniswap. Now, once we're done with Uniswap, if you ever want to trade any of the assets that you do have, so if you have $69 in ETH or in USDT, I can say I want to trade USDT to something else. You can set limit orders now that they've just recently released this functionality, and you can send funds, you can buy funds. They now also have onboarding, offboarding, on-ramping, off-ramping via their own partners that they've integrated into different wallets like MetaMask, like Transact, TRANSAK. So there's other on-ramp, off-ramp solutions that allow you to buy crypto natively using fiat currency. So that's Uniswap. So another very established, prominent exchange is Jupiter, and that's a DEX aggregator. So the equivalent of a Jupiter for Ethereum blockchain is something called 1inch. So 1inch is another DEX aggregator for Ethereum. So and I'll show you that. So that is here. So this 1inch liquidity protocol, it's completely plummeted in terms of trading volume here, but it is actually still being used in some respects. And then there's also there's another one called Open Ocean. This is another aggregator. So you see these are the aggregators. So then we'll see. You just keep an eye on these, and you could always see there's always going to be some that are gonna be released, right? So there's Open Ocean, 1inch, and then Jupiter. So Jupiter works the same exact way. You essentially have the ability to swap, execute limit orders. You can also dynamic cost average in. So you can say, I only want to buy SOL using USDC every minute across 2 orders, or every day across 10 orders. And it'll automatically create a triangle of bids that you just set and forget, right? That's the whole convenience and the premise of it. And irrespective of the price of SOL, irrespective of slippage, irrespective of the amount of liquidity available for that particular asset that you're trying to acquire, you are going to commit to dynamic cost averaging in automatically. And then you can also have more elaborate pricing strategies around like a minimum and maximum range. And there's a lot. And this is version 1 of the DCA tool that they have built into Jupiter, but incredibly powerful. You could also bridge, and that's another module in the course that we're going to build out soon around bridging. So that's you essentially porting over assets from one blockchain to another blockchain. And there's centralized bridging solutions, there's decentralized bridging solutions. They have a built-in bridge aggregator. So all bridge core is example of one. Mayan is another example of a bridge, and then dbridge, right? But there's 50 others. There's like Connext Bridge, there's Symbiosis, there's Synapse Protocol Bridge, there's Rocket X Protocol Bridge. All of those are very, very good. Now they also have the Wormhole, which is another example of a very successful bridge. And then they have OnRamp, which is very similar to what we were talking about Transact. So Mercurio is a competitor to Transact, and these are credible players in the space. So established, they have a track record, they have very active dev teams. So that's Jupiter. So if I want to execute a trade, the same premise. You connect the wallet. They don't use MetaMask unless you use like a snap-in add-on, right? If you want to use a snap-in add-on, then that's one option. I don't personally like to do that. I've experimented with it. I personally just try to use a wallet that natively integrates and supports that particular currency. So I use Phantom, and because I've already approved Phantom, my Phantom wallet itself to be able to be connected to Uniswap. Then this is where you see the assets. So this is the Phantom wallet, and you can see it has Solana, Ethereum, Polygon, Bitcoin, and Bitcoin Taproot, and also Bitcoin SegWit, right? So it has multiple different Bitcoin wallet types, which is awesome. MetaMask does not support Bitcoin natively. It supports other coins via these snap-ins and different add-ons that you can essentially install as extensions. So now that we have the wallets connected and I want to buy $10 of SOL, I can go in and let's see. So I have $392 in SOL and I want to receive, let's say 10 USDC. You can see the slippage is minuscule, almost nothing. And it says exact out swap supports less liquidity. And you see there's only one hop. Right? So your goal is to try to bridge assets, but ideally transact assets or transact trades across as little as possible hops. So you don't want to be hopping from one provider to another provider to a third provider. You ideally want to stick to a single hop, a single provider with as little slippage as possible, as inexpensively as possible. That's what Jupiter is really good at. So it's telling me now that if I want to do this, it's more advantageous to actually do it through Raydium versus Orca. So see, I'm going to trade the SOL for USDC via Raydium. And this routing channel is what's amazing. So see, now it just changed. So if I do Solana to USDC now, it's gonna convert it to a staked SOL, then convert it on Raydium to ETH, then convert it back to Orca via USDC. Amazing. So if I click swap, it's going to show me now. See, if I click show price info, the price impact is less than 0.1%, which is minuscule. The maximum consumed and the max transaction fee is listed. You have your deposit fee, and let's swap. So it's going to ask me for approval, which is what you see here. And you can also set up auto confirm if you want. That makes me nervous. I would never suggest doing that. If you have a network fee, see how small the network fee is? So you're talking about, from $6 to 0.007. It's less than a cent, right? You're talking about less than a cent. And let's confirm it. So confirming transaction and confirmed. So it's almost instantaneous. So now that we have the transaction confirmed, we go into Solscan and you can see everything here. So you see exactly what was done across both exchanges. So it actually used Raydium and Orca to settle a conversion of Sol to USDC of only $10, which is pretty incredible. And that's really how to transact on-chain trading and to execute a trade across the Ethereum blockchain, execute a trade across the Solana blockchain. The other thing is in Uniswap, if you don't want to use the Ethereum blockchain, you keep in mind that there are integrations for other blockchains. So they have Arbitrum, they have Optimism, they have Polygon, they have Base, which is the fastest growing layer 2 Ethereum-based blockchain created by Coinbase, BNB chain created by Binance, Avalanche created by multiple professors, and then Celo, and then Blast, which is another leading layer 2. And it's pretty incredible. So that's Uniswap. And then Jupiter, there's a few other things, a few other settings that are probably worth mentioning. Is there's also perps. So it is definitely the most active, the most active like perpetual futures Solana-based DEX solution, one of the. And then they also have their LFG, like basically platform, and it helps with like capital management and fundraising and et cetera. And it's basically like a jump off platform. And you can click the settings. You can access different RPC endpoints if you're experiencing any form of delays. But in the trade, you can adjust the priority. So if you want transactions to execute quicker, you can change the priority fee. You can go to the priority mode and change the max cap as well. So if you're having trouble executing trades, you can do it that way. Another option is Raydium. So this is the third and last one that I'll go through now, which is you trying to execute Solana and buying Raydium by actually using Solana. But it's the same mechanism. So you literally just say, I want to buy 1 Sol worth of Raydium. And it's telling you that you're going to swap through a CLMM liquidity pool itself. And that's offering the most attractive price with a minimum amount of received of 89. So the slippage is minuscule. And then you execute, right? So once you execute, it's going to ask you to confirm if you're happy with it. And that's what you see on the right-hand side. If you're happy with it through the Phantom wallet, it'll execute. So you are good. But it has built-in liquidity pool tracking, like most decentralized exchanges. And then also has some farming opportunities as well. It has staking. So it's quite an established decentralized exchange. But I like to personally use and route trades through the Jupiter DEX aggregator rather than try to fiddle around and try to settle trades on Raydium, because I've had quite a bit of difficulty actually settling transactions on that platform. So hopefully this helps. The most important thing is if you're trying to execute a trade on any of the major EVM, like the Ethereum virtual machine-based blockchains and compatible blockchains, then you can use these 3 or 4 exchanges that we went through. But if you're trying to buy ordinals and you're trying to buy like SRC20 Bitcoin stamps or runes and so forth, these platforms are not compatible with those with those types of products, right? And for those, you're going to have to use different tools, right? So you're going to have to use like Magic Eden, which is one platform that's constantly used. And it's the same concept, right? You would connect a wallet, and once you connect the wallet, you can actually acquire different assets that are there. And we'll go through some of this in the NFT trading, right, platform. It's the NFT trading course. And hopefully you find this helpful.